Good morning, everybody. This is Matador from freetradingvideos.com. It is January 20th. Nice Wednesday in 2010. This is the S&P 500 ETF, little 3-minute chart. You can see that after this great run-up, we'll talk about that in a minute, we have gapped down now, pre-market, to 114.80. Sold off, ran up to that same resistance area, and now we sold off again to below the swing low pre-market, and we're at 114.27/30 area right now. Yesterday, if I can bring this up, you can see that we had ran right down into our previous support. We talked about these levels in the morning and the afternoon videos, ran right to our areas and then stalled beautifully right in this area of unfilled gap and the swing highs. If you remove the pre and post market data, so do now, you can see why this 115 area again is so relevant, but that is a 100% retracement of this sell-off, and that's X% more bullish. Again, if we open where we are right now, we'll be right around this 114.24 area, so that's should be noted. And it's going to be an interesting morning to see how this gap fills, if it does at all. There's been quite a bit of news in here. Bank of America posted a wider than expected loss. This is just a Yahoo Finance. Morgan Stanley swaying to a profit but missed their target. Stocks fall on China concerns. Home construction dips. U.S. Bank Corp profit rises. There's all sorts of news in here that needs to be priced into the market, and part of that is happening pre-market right here. So we are going to be watching the open very carefully today, again, to see how that gap gets filled, if at all. If the news gets priced in very nicely and we continue higher, we're still going to be watching this 115 area for resistance. Again, that'll be a gap fill. And if it fails and we start heading south, I'm still going to be using this 113.70 area, which is still relevant. You have to have pre and post market data to see that, I believe. And then also the 113.20, and then below that 113 even. You can see through here, but these swing lows are dramatic enough to make me want to hedge it up to 113.20 a little bit. But this is still going to be relevant. Just draw a little ellipse in here if we do head south. So good stuff, beautiful, albeit wider swings now occurring at the top. So very good. We're chopping around, basing on our high. This higher volume print that we talked about yesterday, and that we were going to watch that because it was a crack but not a complete break, and we're seeing that happen now. Anything can happen in the markets. Good lesson, and hope you guys are having a great trading week so far, and I'll talk to you around noon to see how things are shaping up today.